It's about that time of day again. My name is Joseph. Tuesday evening, July 31st. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. My plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish with a strong bear channel, and that tells me to wait for selling opportunities up above the moving average using a buyer failure pattern tomorrow morning. The S&P is bullish but trading at the high of a range, so I'm looking for these bulls to fail using the 2-try rule for selling opportunities back down to that range low tomorrow. The Nasdaq is bullish, but after a late session rally, we're way too high to start buying now, so my plan is to wait for a pullback. But I have some big clues on the chart tonight that tells me that pullback may just turn into a complete reversal tomorrow morning. Don't forget about gold. Gold is range bound with a megaphone pattern ahead of tomorrow's FOMC announcement. So I'm staying patient and I'm looking for selling opportunities off the highs of that range tomorrow. Got a good plan on the yellow metal. And of course, wrapping up tonight on the euro. The euro is bearish with a spike in channel pattern. So of course, I'm looking for selling opportunities using bull traps up above the highs of that channel tomorrow morning. Guys and gals, we are headed into the bee's nest known as the FOMC day tomorrow, which of course has a distinct personality to it. And as always, I have a reliable plan of attack. But before we jump into those charts tonight and put this plan together for tomorrow's FOMC announcement, I need to remind you, if you're watching me on YouTube this evening, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave the link, all the links in the description of the YouTube video. Also, if you have any questions about anything covered in this video, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing, and don't forget to hit that bell icon so you always get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at sidewaysmarkets.com. This is where all the action happens every day, and make sure you join our mailing list. That's right, in the upper left-hand corner, give me your name and your email address, and I'll send you an email every time I publish something new. If you're hanging out on social media, Stock Twitch, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice, I post stuff on my social channels that you won't find anywhere else on the interwebs. And how about some charts for tonight? How about some charts for tomorrow? How easy is this? All the charts from tonight's video, you can have them ready to download on your computer for tomorrow, right where it says click here to download today's charts, grab those charts, and be ready for tomorrow's session. And speaking of tomorrow's session, how about a free pass? If you're not a member here at School of Trade and you'd like to see what it feels like to be in our trade room, trading this strategy, grab that free pass and come join me as a guest in our trade room. And don't forget, you can always pick up the phone, send me an email, right? Post a comment below the video tonight, or you can always use live support on the right-hand side of our website if you have any questions along the way. All right, guys, we are wrapping up the month of July. I cannot believe I'm saying this right now, but August, let's do this. We got August 1st tomorrow, Wednesday, coming at you hot here right now. It is a little bit hot, too. It's been a pretty warm summer so far, right? We've got some pretty warm weather here, especially in Los Angeles here for this time of the year. But our bottom line, though, is, right, keeping on topic here, end of the month. We get a brand new month starting here tomorrow morning. And why waste any time, right? Why waste any time? Might as well just rip the Band-Aid off and go into what is historically one of the most challenging days, right, you're going to get 8 times a year, and that is the FOMC announcement tomorrow. Now, we talked about this last night, right? We had the beginning of the meeting today. We're expecting to see a lot more of what we saw last time the FOMC announcement came out. We're expecting them to stay aggressive on raising interest rates. They've been very, very low for a very long time. The economy is showing a lot of strength right now. And so we're expecting to see a lot of the same stuff tomorrow. That's the bottom line. Most analysts, most estimates coming out right now are not expecting any big changes tomorrow, which should lead to a relatively quiet session. But the most important thing you want to keep in mind for tomorrow is that the FOMC announcement has a very, very distinct personality to it leading up to it. Most of the time on an FOMC announcement day, which we call Fed Day, right? It's known in the industry as called Fed Day. So on Fed Day, usually you're looking at those first few hours of the day, right? So we're talking 8 a.m. until about 11 a.m. Eastern time, right? That block tomorrow morning. After 11 o'clock Eastern, what happens is the volume dries up and most traders will leave for lunch early so they can come back before the announcement comes out and get themselves ready to go. Now remember, as an individual trader, your job on an FOMC day, right, at least my strategy on Fed Day, is just like any other day with there's major news in the afternoon. I want to get to it early tomorrow morning. So 8 o'clock to 11 o'clock tomorrow morning, the U.S. session, that overlap between the London and the U.S. session, that's going to be my focus tomorrow. After 11 o'clock, the volume will typically dry up pretty quickly, right, I might add, and things start getting a lot less reliable. Now, one of the most common questions I get is, what about after the news tomorrow, right? What about 2:15, 2:30? This is where we have some really big challenges because the FOMC announcement, much like the GDP report last Friday, has its tentacles in everything, right? The ripples go into every corner of every market. And so what will happen is you'll see a market react here and then the other market reacts there, and it can be a very choppy, unpredictable, and of course unreliable environment after the news comes out. So I'm going to repeat it again. My plan for tomorrow is to grab those trades early, 8 o'clock to 11 o'clock, and then ultimately put my helmet on, batten down the hatches, right? You're free to hold positions over lunch, but I'd be very, very careful, right, if I were in your shoes, entering the new positions after 11 o'clock tomorrow. So it's almost like a Friday, right? Early in, early out. And again, it's going to be tempting to want to trade that chaos, right, after that 2 o'clock announcement comes. And it may not be that chaotic tomorrow, again, because it is kind of the middle of the summertime season right now. They're not expecting a whole lot to be changed tomorrow, but I'll tell you, you never know what's going to come out, right, of these politicians' mouth, right? You never know what's going to happen. So be aware of the situation tomorrow, early in, early out. Protect that capital right in the afternoon. That's pretty much all we have on the schedule for tomorrow. We do have the ISM manufacturing index at 10 o'clock. That will be a good shot in the arm. And remember, much like we talked about the personal income report for today, your eyes are on inflation. Inflation means dollar, dollar means gold and currencies. So ISM manufacturing tomorrow, watching gold, watching currencies. We'll talk about those in just a moment. And then also don't forget, I don't want to forget this too, tomorrow, of course, is going to be even a little bit more challenging for all you oil traders out there. You know me, I love trading oil. And tomorrow morning, the cutoff is 10 a.m. on Wednesdays, right? So we're talking early in, early out for all you crude traders tomorrow because we got that 10:30 news, that weekly inventory report, right? So for all the markets, I'm looking at 8 o'clock to 11 tomorrow. If you're trading oil, 8 o'clock to 10 o'clock. I know it's a little bit smaller, right, window of the best trades here tomorrow. And then again, shut her down, right, over lunch. Be careful around that news, right? I'm not a big fan of trading the afternoon when we get FOMC, right? If you do choose a trade tomorrow during that news event, right, wear your helmet, trade smaller size, right? Be very, very careful because stops are not going to hold when this thing starts whipping around after that FOMC announcement. All right, guys. So Wednesday, tomorrow morning, first of the month. Very excited. We had a great month of July and looking forward to seeing you guys tomorrow during FOMC Day, Fed Day in our trade room. Now, speaking of trade room, let's go over the plan, right, for tomorrow's trading session. I've got crude oil, S&P, Nasdaq, gold, and we're going to wrap up tonight on the euro. Remember, we got that 10 o'clock news tomorrow, so gold and euro are definitely on our radar here. Now, jumping in tonight on crude oil. Crude is bearish with a channel and a previous range low on the chart this evening. The bear channel is steep. It's relatively narrow. And that tells me this trend is strong for the bears, which tells me that any move higher is most likely going to be seen as a selling opportunity for the bears. Another big clue is this prior low from last Friday, right? You see that prior low at 68.26, which we identified last night as the seller's objective today. And as you can see, buyers fail, sellers took it lower, right? And you can see by this big wick down here, right? You can see they clearly tagged that 26, right? And took all their profit. And here we are sitting down at that Friday low. So we know the bears have control. That's pretty easy to see. But I don't want to sell right on top of what I think is the market's objective. So my plan for tomorrow is to look for selling opportunities, but rather than selling low, let's sell high. Let's get back up above this channel, get back up above the moving average, right? Maybe it becomes a range tomorrow and maybe we're selling, right? Whatever it is, I want to sell high on this chart. So again, we know we're sitting right at that prior day low. If I zoom out a little bit, you can see, right? It's obviously a milestone, right? It's a big low there from that previous low. You can also see, though, another milestone, right, coming from last week's low is down there at 67, right, 56. So that's definitely going to be the next milestone if these bears can crack through this area. I think the two big clues here, the prior low, we're sitting right on top of that prior low. That was the objective. And then, of course, we have this bear channel, right? This is a beautiful bear channel, by the way. It's 45 degrees, right? 45 degrees or more. It's actually steeper than 45, right? I've got 1, 2, 3, 4 tests, which means it's a qualified channel, right? It's relatively narrow, which means the strength of this trend is very strong. And that tells me that anything that goes up is probably going to come back down again. And so what I'll do is I'm going to use this 68.26 area as kind of the low here, right? As the low. In fact, I probably should have added in maybe a little bit of a green rectangle there just to visualize, right, that low there. Just want to make sure you can see that, right? That big wick there, that big wick right there is a big clue, right? You don't want to ignore that big wick. So I want to sell and I want to sell high. Let's put the plan together if price goes up, if price goes down, and if price goes sideways. The first thing I would like to see is I'd like to see us jump. In fact, I'd like to see something similar to what we saw back here. Now, we talk about this all the time, right? We want to see a strong correction, a buyer failure. That failure leads to strength, right? We don't chase the strength, right? We wait for the pullback and back down again. Do you see that formula right there? 1 try, 2 try, failure, pull back, back down. That's the same basic principle, right? You even saw it up here. 1 try, 2 try, failure, strength, back down again, right? So that's the general idea. I'd like to see us get up off this low, high enough to get these buyers to try to buy that pullback, right? Now, of course, once they try to buy that pullback and we see the market start going higher here, now we know where their stops are. And now we can sell right into those stops, right? Once we sell into those stops, then we're going to get that moving average coming over and we can sell off that moving average right on a pullback. So what this ends up being is it's a buyer failure pattern, what I call a 2-try buyer failure, then into a seller pullback, right? It's a bull failure, a buyer failure into a bear pullback pattern. Now, I'm going to be going over a lot of terminology like this throughout the entire video tonight. And what I want to do is I want to give you a shortcut. You could go out and watch all my old videos here on YouTube, but I want to help you out here because I know you're probably here for the first time today. If you're here for the first time today, I want to give you a shortcut. I want to give you a free trading class, right? And that free trading class, I'm going to put a couple links in here. I'll put a link up top here, right in the upper right hand corner. That will take you to a page on my website where you can register for that free trading course, or you can also go into the description at the bottom of the bottom of the video. Go into the description in the YouTube video, right, and you'll see that link is right there in the description as well. So to get a lot more detail about all of these patterns, right, the 2-try failures, the bear pullback patterns, right, to really get a deeper dive into this, right, into this strategy, grab that free trading course. Now, that's if price goes higher here, right? What if price goes sideways, right? Tomorrow's FOMC day. What if we come out tomorrow morning and we see a double bottom off this low, right? What if we go down, double bottom here? What if we're going sideways? What if we have a double bottom at that low and we're just hanging out going sideways? Then what do we do? Well, then we're looking to use a same basic pattern, but now we want to use, right, the 2-try rule, right? So 1 try up, 2 try up, and then looking to sell that failure. And if I can, looking for a pullback, failure, pullback off the high of that trading range. So if we do go sideways here, and again, how do we know if we're going sideways? We're going to have a double bottom right at that low, right? Doesn't have to be exact double bottom, but it's going to be close, right? It could be a little bit lower, could be a little bit higher, but again, if we're not seeing lower lows, let's put it that way. If we stop seeing lower lows tomorrow, right? A good example up here, right? This is close enough, right? These are not exact, right? Those not exact. You can tell they're all struggling at the same area. So if we see something similar to that, right, down here tomorrow, then we know the market's range bound. When I see the market going sideways like this in range, I now know, look for the buyers to go try once, look for the try twice. That will activate the 2-try rule. Now we can sell into their stops. Don't chase after it into that range. Sell it up around the top of that range on the pullback, right? So 2 easy ways there. Now, what if we go lower? What if we go lower here? What if we keep grinding lower here? Well, again, we have a good idea of where that next objective is, then at 67.56. If we keep going lower, right? If we keep going lower, your keyword now is traps and using the top of that channel. So what I'm going to do is I'm going to try to combine the top of that channel along with, right, a prior swing. Now, obviously, we don't have enough information yet to know where that is, but that trap pattern will oftentimes lead to a pullback failure for the bulls, and that will lead into another sequence going lower. So again, it's going to be a bull trap into a bull failure, right, into a bear pullback. As you can see, though, no matter whether we go up, we go down, or we go sideways, tomorrow's plan is sell at resistance, right? Sell at resistance. If we start running lower here, right, don't just take the bait and try to sell low. Wait for it to go up so we can sell back down again. Now, last but not least, how do we turn bullish, right? Certainly we want to be ready for that tomorrow. How do we turn bullish? Well, another thing you're going to learn in that free trading course is the 1, 2, 3 reversal, right? What does a 1, 2, 3 reversal look like? Well, here it is right here, right? Yesterday we had this strong bull market, right? How do we know when the market reverses? 1, 2, 3. Once we saw that, right? Once we saw that, we knew this market was bearish, right? And then once we find that bear market, we're drawing off these lows up to that high, and you know to sell off that high. It's the exact same strategy, right, that we talked about in last night's newsletter, right? So if we turn bullish, how do we turn bullish? We need 3 things. 1, a strong counter trend move. 2, a pullback to the moving average. Got to pull back to the moving average. If it doesn't pull back to the moving average, it doesn't count. Number 3 is a bam. Now remember, I call this a 1, 2, 3 reversal, right? It's got to be strong. There's an exclamation point, right, at the end of that 1, 2, 3 reversal. Once we have a reversal, then I look for a hidden channel. Draw off the high, up to that low. That creates this hidden trend line, right? And I'm looking for the buy, right, off of that low, right? Again, we saw the same thing today, right? Strength, pullback, strength. 1, 2, 3 reversal. What do? You line up those lows, right? You line up those lows. I went out to that low, right? Like that, up to those highs, right? And you're selling off of those highs, right? We then see it up, one try, two try, failure, strength, pullback, right, and back down again. If you watch my newsletter, this is par for the course, right? This is what we talk about every night on this newsletter. So now we're ready to go. And don't forget, 10 o'clock tomorrow, right? Not 11 o'clock, 10 o'clock. Why? Because we have the weekly inventory report coming out, right? Yeah, coming out at 10 o'clock tomorrow. Let's keep going. How about some S&P? The S&P is bullish with a trading range, a pendulum swing, and a major support trend line on the chart to work with this evening. The trading range is a big clue. It tells me to sell the high, buy the low, and avoid the middle, while using the pendulum swing to anticipate the most reliable turning points on the chart for tomorrow morning. The major support trend line is also a big clue, reminding me that this market has a lot of bullish momentum. And the only way that I can confidently sell off the high of this range is going to be to get below this trend line, right, and use it as resistance tomorrow morning. So looking at the chart here right now, again, there's really two main components on this chart. First one is a trading range, right? And I can take the amount of the move below that range and project it above the range to create a level of resistance. We call this a pendulum swing, right? Now, the pendulum swing has so many different ways it can be used with ranges. It can be used with channels. There's so many different ways to use it. Again, right? Again, I have a lot of it in that free trading course. Right, so go into the description of this video and register for that free trading course, again, or upper right-hand corner, right, and grab that free trading class, and you'll learn all about these pendulum swings. The most important thing is the range says buy low, sell high, avoid the middle, right? So here we are, we're above the top of that range, right? This is where I want to be a seller up here. Okay, now what else we have to worry about here? Well, you can't look at this chart and not clearly see this channel. Right? This channel tells me I've got support at the low and resistance at the high. Okay, so the problem is I want to sell the high of this range, but I'm not going to sell into this trend line. No way, right? It's way too aggressive. It's not reliable enough. So those are the two big components. I want to sell high here, but I don't dare sell right into this rising support trend line. So really there are pretty much two ways to do this, right? One is going to be I either need to get up into that pendulum swing and try to incorporate the high of this channel. And this is going to be one of those aggressive type patterns where I'm going to have to go up and sell off of that high. It's not going to be an easy one. That's going to be a tough pattern to take because the momentum is going to be high, right, going higher here, and it's going to go against your instincts, right? Well, your trained instincts, right, for being a trader. And the reason why I say that's an option is because it's the only way to get me enough room here away from that trend line, right? I don't want to sell into that trend line, all right? So you can get to see what will look like, right, as we go higher here. One try, two try, right? Failure back down. It's going to be similar to that, but up top here, right? That's the pattern you're looking for, okay? The other pattern would be getting below this trend line and then using that trend line. This would be a whole lot easier on our emotions, right? Using that trend line now basically as resistance, right? Using the trend line, using the top of that range. Because remember, I want to sell the top of this range, right? I don't want to buy the top. I want to sell the top. Right? So those are the two big components right now. So how do we play those? Well, again, imagine this pattern right up here. The problem though is this. If we get a strong move higher here, the momentum is going to be too much. So here's what I need to see. I'm going to be looking for basically the one try, two try. I'm looking for a buyer failure, but I can't take that failure. What I'll look for is I'm going to look for that sell coming off the moving average right there, right? You can see the example right there. Now, obviously, that wasn't a good sell earlier today because of that rising support trend line. But if I can get this pattern to give me a trigger right off that high, I can sell that because I'll have enough space before I run back down to retest that low. Okay? Now, again, right? That's gonna test the blood pressure medicine, right? That you might want to do that under some doctor's supervision tomorrow, right? If you're concerned about heart health right now, because it is going to be a little bit of a nerve-wracking trade, right? Because you're going to be trading against what feels like, right, the market's momentum. That's why I say don't take the failure, right? Take the pullback afterwards, right? If it wasn't for the bullish move here, I would say take the failure. Okay, makes sense? Now, the much easier pattern here is going to, right, is basically going to look like we saw back here, where the market ran into the range and then pulled back and gave you a chance to basically buy off of that low. This is the same idea. We're looking for that strong move down and then looking for a chance to sell off of that high. And what that will probably look like is exactly like this. Right, opposite, of course, right? We go down, the bears, they try to sell it, failure, back up in. So it's going to be almost identical, but of course flip-flopped, right? So strong move down, we go up, right? That'll take us above the moving average. Looking for those buyers now to try to buy it. That gives me now the green light for the failure, and now I'm selling the underbelly of that channel, the top of that range. That, right, that incorporates my entire strategy for tomorrow. All right, guys, so that's how I want to be a seller on this. Now, what if we collapse back down, right? What if we just go tanking back lower here? If we tank lower here, right, if it just rolls lower here like this, okay, we're going to look for pretty much the same thing we saw back here, right? Strong move down, one try, two try, and then we're looking for that move back up into that range, right? So if we just collapse lower, again, we go up, we get a plan, right? We go down and up, we get a plan, right? If we collapse lower here, we're going to want to let that two try rule play in. Let the moving average come over. Let's get that a little bit better there, right? Moving average come over. Let those bears try to sell it. Right? Let them try to sell it. And there are two patterns now I'm looking for. You can see what happened, right, when those bears got stopped out back there. Right? You can see what happens when we have a one try, two try, right, failure. And guys, and again, right, if you want to learn more about the two try rule, plenty of examples in the free trading course, upper right-hand corner, right, or below in the description of this YouTube video, right, you can learn more about that two-try rule. There's a lot of different niches of that two-try rule, a lot of different ways we use it, right, so that will give you a lot of good examples in that free trading class. Once I see that one try, two try, I'm looking for where the stops are. I'll look for that buy into those stops, and then most importantly, don't chase after it, looking for the buy, right, going back into that range tomorrow. Okay, so those are the most important clues there, right, we're looking for, okay, when it comes to a trading range. Last but not least, right, how do we break out of a range? We talked about the 1, 2, 3 reversal, right? Well, this is the 1, 2, 3 breakout, right, with that exclamation, right? 1, 2, 3 breakout. What does that look like? 1, 2, 3, big, 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 strong move. Right? It's going to have to be, it's again, there's an exclamation point at the end of that move, right? So imagine yourself watching that nice strong move up, pull back to the moving average, right? Buyers aren't worried about buying the high of the range, bam, right? The bears walk away, the buyers take it. What do we do next? We find that new hidden channel. That becomes my new major support, and we're looking to buy off the low of that channel. Could happen tomorrow, right? FOMC day tomorrow. It could definitely happen. Let's keep rolling. Now we got our S&P. Let's finish up the E-minis with our Nasdaq. The Nasdaq is bullish with a wide bull channel and a possible trading range on the chart this evening. The wide channel is a huge clue telling me the bulls have control, but the size of this channel allows the bears to grab control as price rotates back down to the lows tomorrow morning. And speaking of the possible trading range, there's a double bottom there, right? And what might be a double top, that double top isn't quite perfect here. It could be a lot better, right? But this looks like a trading range. It could easily be a range for tomorrow, and that could also, right, lead to price tumbling back down again. But before I go any further, let's be very clear here. This is a bull market. Right? This is not a bear market. The bulls have control, but they're way too high right now to buy. right? Way too high, up way above the moving average, right into the measured move, right into that trend line, right overhead. I can't buy this, right? I can't buy this. If I do want to buy it, I'm gonna have to make sure they can hold this pullback, right? But if they can't hold this pullback, right, this could easily collapse right back down to the low of this channel and maybe all the way back down to that low at 71.70, right, that prior low from Monday. So as you can see here, I think the big clue right now, whether or not this range is legit or not, the problem is that for you to have a range, you've got to have either an obvious triangle or double tops and double bottoms. Now, I can easily see that double bottom, but the double top is, it doesn't look great. It doesn't look great. If this, and I'm not talking about the higher high here. The higher high is not the concern. The concern is down here. Because if this was, if it did this, right, if we went up, and then back down again, that's done deal. That's a range right there. Right? I don't care about that higher high. The higher high is not the concern. The concern is the rotation, grasshopper, right? It's the rotation. We need to get that rotation right back down. That's the only way this is legit, signed, stamped, approved as a range. Okay, and again, you'll learn about ranges. You'll learn about a lot of those ranges actually, right? How to use ranges in that free trading class, right? You'll find the link in the description of the YouTube video or upper right-hand corner. Now, knowing this, right? I'm on edge about, I'm maybe on edge, right? But I'm still questioning whether or not this is a range. There's no doubt about it though, right? That this looks great as a channel. Right? Looks great as a channel, right? We go up, we go back, we go up, right? We pull back, and it looks like there's a little bit of short covering rally, there's a little bit of momentum towards the end. So I like this as a trading range, right? Now, earlier on today on oil, we talked about how oil, right, had a really narrow, right, channel. See, when a channel is really narrow like this, the opposite side of the market can't get any momentum going, right? I mean, how much space do the sellers really have here, right? Can I sell off the top of this channel? And is there enough room there to make any money on? A little bit, right? A little bit, but very, very little, right? There's very little potential for sellers to make money when the channel is narrow like this, okay? That's the key here. Now, if I go out to a wider channel, right? If I go out to a wider channel now you tell me, can sellers get short and make some money here? Oh, hell yeah, right? Absolutely. In fact, you can guarantee they're looking at this going, perfect. This might as well be a trading range. Buy low, sell high, right? That's the key. And so what we're looking for here now is we're looking for that move to rotate back down again. Okay, that's what that big wide channel tells me. And I'm telling you right now, listen closely here. When we rotate down to the low of a channel like that, right, you've really got to be careful buying it. In fact, you can see right here, you've got to get back above it and use that moving average as support, right? You're not going to take a failure pattern, right, for that trade. So when it comes lower here now, that momentum is so strong going lower that a lot of times it never even stops and just keeps on running through that, right, through that channel low. So the moral of the story is that we can sell off the high, we can buy off the low, but with a wide channel though, it makes it very difficult to use failure patterns, right? That's the key. So no failure patterns here, right? We want to use pullbacks, and here's what they're going to look like. So first of all, what I'm looking for is ultimately this in a nutshell. I want to see it go below that moving average so I can hold and sell that pullback. So that's the plan, right? What we're probably going to see first is the buyers will try to buy that pullback. The problem here is, and you can take this trade, right, but just like this one struggled, it's just too bullish. The market's too bullish to trade this as a failure pattern. Right? If we were balanced or if we were bearish, absolutely, right? When the market's bearish, I can go up, I can get that moving average, and I can sell, right, into that buyer failure, right? I can sell that buyer failure. but it doesn't work the other way around, right? If the market's bullish, that doesn't work the same, right? So we're bullish here. Buyers try to buy the pullback. We know where their stops are, but again, it's not going to be reliable enough because you're going to get something like this. You're going to get that one try, that two try, and then right below that low, buyers are going to go, good, it's low, buy it, right? And they're going to buy that market, right? It's why you don't want to take a failure against the momentum of that market, right? Reading market momentum. Okay, I want to go with the momentum. Now, how do I get that momentum back on my side? One try, two try. Again, I realize a failure on strength, perfect. Now let's bring that moving average over. Now we have a level of resistance, right, coming down overhead. We can almost always find a little hidden channel here as well, coming off that low to low, up to that high, right, and now we can sell towards the top of that range, right? We can sell at resistance, right, and the trend now, the momentum now is shifting lower. Okay, now remember, you've got that rising support trend line here, right? So initial target here, leave the runner down to the low, right, of that trading range. That's going to be, right, really the only way you're going to be able to safely do it. Another way to do it would be, let's just say, for example, we collapse, right, back into that range tomorrow. If we get a market that collapses back into that range, now what I'll do is find that new hidden, right, trend line up here. Look for traps, right? And again, don't sell into that rising support trend line. Sell it up, right? Try to get it up and sell it back down. Okay, see I'm doing that, right? So if we do collapse lower here, don't chase it. Draw out that new trend line, copy and paste it up for a hidden channel. You know where your swings are. You know where your channel is, right? Again, don't sell low, right? Sell it high, right? That'll be a much easier way to do it. Okay, so that takes us back down to the opposite side of that range where, again, one try, two try. Again, the momentum is going to be so strong, I'm going to have to get back above that moving average, right, and be a buyer from there, right? That's going to be the pattern I'm looking for tomorrow coming off of that low. Whether it's at the low of the channel or the low of that range, it doesn't matter. Now, what if we go higher here? That's a big, strong move, right? What if we go higher? If we go higher here, the buyers will have no problem holding this pullback. Show me. Prove it to me, right? Prove it to me, bulls. We're right at the measured move. We're right at the trend line. We're a mile and a half away from that darn moving average right now. Prove it to me. If you can prove it to me on some strength going higher here, I'm all ears. I'll find that new channel. We'll draw it off that low, right? And I'll look to be a buyer off of that low, right? All the way back up to retest last week's high, right? But you got to prove to me first, right? That's the plan if we get this thing rolling higher. All right, guys? And my target on that, we'll use that leg, and then that, of course, will project that measured move going higher, right? That third leg higher. All right? Again, I'm not holding my breath on the buy side right now. I'm waiting for some more information, right? If we pull back here, though, this could easily get ugly for the bulls and present us with a great selling opportunity here, right, for a nice big profit going lower tomorrow. And then there was the gold. Ah, boy. Would you guys mind if I just skip this chart here tonight? No? Okay. All right. Gold is range bound. As you can see, gold is still really struggling here after rollover on Monday. And now, of course, right ahead of tomorrow's FOMC announcement. Gold is range bound. They're trading almost in the middle of this expanding triangle, also known as a megaphone pattern. Now, the big thing is, right, we got two things tomorrow. We got the FOMC announcement and we got this megaphone. The megaphone pattern is rather simple to trade. Wait for price to test the highs or the lows, right, and then look for trades going back into the middle. Okay, buy low, sell high. We talked about this last night, right, on the newsletter, right? You can see how the market, right, came out of that triangle, right? There was a triangle yesterday, and of course, you'll notice here, right, there's still just kind of lazily, if you want my opinion, right, rotating back and forth here. So a triangle, an inverted triangle, basically tells me, right, buy that low and sell that high. Now, this is very similar to what we just talked about, right? The momentum will be so strong, right, as it gets back to the high or the low. Okay, the key to a good megaphone is that when the megaphone is relatively narrow, you can get pretty aggressive. But let's just say, for example, I want to sell the top, right, of this range tomorrow, right? I want to sell the top of this megaphone. If we get this thing going higher here now, this market is significantly bullish. I can't just sell this thing. I've got to now wait for that one try, two try, and then remember, right, get that momentum shift, find that new channel, right, and then sell that pullback, right? That's my plan for tomorrow, right? Again, it's the one try, two try at the top of that range. I want to sell the top, but I don't want to sell into that bull momentum because for all I know, it's going to keep on going. Right? I don't know enough about it yet. I don't have that proof. You won't either, right? You won't have enough evidence at that high that will tell you can stand in front of that freight train. Okay, so we're not trying to pick the top, right? We're trying to anticipate the top might come at that area. I wait for that move off the high now. I don't chase the move off the high. I use that new low to find that new hidden resistance, and bingo, we'll sell off the high, right, of that range. Okay, the same thing goes the downside. But as you can imagine though, right, if we go up one try, two try, failure, right, into hidden channel, right, back down again, this sucker starts dropping like this. Do not even think about buying the low down here, right? Buying? No, right? The momentum is way too strong, right, going lower. So, of course, we'll have to wait for that momentum to turn, right, and then go back into that range. A lot of times, though, once these megaphones get so large like this, right, the opposite side of that range is no longer relevant because the momentum just picks up so much speed that it's going to be impossible, right, to stop it. So the bottom line is it's FOMC day tomorrow. I talked about this last night. I don't think I said it tonight, though. Out of all of these markets tomorrow, gold is the most challenging. So if I could think of one market that if you said, Joe, I've only got time for a couple things tomorrow, what can I ignore tomorrow? Gold would be one of them. And you can definitely tell everyone's waiting on the FOMC tomorrow because we had rollover on Monday. Usually the day after that rollover, we talked about the funky rollover schedule yesterday, right? Usually on the gold, the day after, usually it gets back to normal. This is clearly not back to normal. So you can definitely see that traders have most likely been a little bit on a trader holiday ever since that rollover last Friday into Monday, and they're looking at FOMC tomorrow, I would imagine, from what I saw today. I mean, this price action was junk today. So I would imagine tomorrow, 2 o'clock Eastern time, when the FOMC announcement hits, that's what everyone's waiting for on the gold. So be careful tomorrow. Probably going to be a rough and tumble day tomorrow. Stay away from that middle. Sell the high. Buy the low. But just the way it looks right now, it's a lot easier to sell that high, right, than it will be to buy that low. Because if it goes back to the low right now, that's going to be one hell of a trend, right? And this will become a bear market, right? And we'll be trying to sell high at that point, right? Again, because it'll be such a strong momentum, right, going lower at that point. The hard part is going to be staying away from that middle tomorrow until we get some more information, right, from the Fed. All right, let's wrap this up tonight on the euro. The euro is bearish with a spike in channel and a trading range to work with this evening. The spike in channel pattern tells me to look for selling opportunities up above the highs using traps and buyer failures up above that moving average, while the trading range reminds me to buy low, sell high, and avoid the middle with the pendulum swing target down near that range expansion level tomorrow morning. So this is going to be a little bit of a repetition. We've already talked about a lot of this already here tonight. And again, right, there's two components here. There's a channel and there's a trading range. If I zoom out here, right, there's that trading range, right? We're buying low, we're selling high, right? We talked about this in a lot more detail last night on the newsletter. Now, here we are. Right, a beautiful momentum shift, right? We're above the range. We go up. We shift momentum. Look at that strong move down. Look at the bears. The bears are like, feed me, right? Selling off that momentum switch. right? That's what you're looking for. That's what you want to see around ranges to turn that momentum. We talked about this one last night, right? We had this big strong move down outside the range, right? You don't try to mess with the failure down here because again, you're going to get stuff like this which will stop you out, right? And roll over. You want to wait for that turn and then grab it. Right? You can see everyone was loving on that, going back up right into that range. And it's amazing how ranges work because ranges, what happens is, right, it's like the minute they hit the opposite side, all this is that trading range, right, projected higher. That's all that is up there, right? That's all that is. And you can see they just stopped right on a dime. So now we take the amount of the move above the range, below the range, we call it the pendulum swing, right? The pendulum swings up, the pendulum swings down. So the trading range right now tells me the target for the sellers is back down just shy of that, we'll call it 16,950 or so, right? Just shy of that 17,000, right? Big round number. Okay, so that's the key here right now, right, for the range, right? That's the key. We have the move up, right? We've got the turn, right? We want to keep going lower. Another component of the range, right, is we want to what? We want to buy low, sell high, right? I want to buy low, I want to sell high, and I want to avoid the middle. So where are we right now? We're low, right? We're low right now. Not a good place to be buying here. Sorry, not a good place to be selling, right? And the hard part is the momentum is so strong going lower, it's not a great time to be buying either. So this is one of those scenarios where, right, we're tied up. We're too low to sell, right? And we're too darn bearish to be a buyer. Okay? Now, what else do we have? The other big component here is a channel, right? And I talked about this a few times already. Strong move down. There's the channel right there, right? And I'm always looking for what I call hidden levels, right? If I take these two lows and I bring them up at that high, look what happens here. It almost creates a bigger channel, right, and a midline right in the middle. See that? Right? So what I'm doing is I'm kind of looking at this now as a new channel. Again, it's kind of a hidden channel, right? Not a lot of folks are going to see that. Okay, now that's a key because look where it also lines up. Right at the top of that range, right? So now we've got a couple levels here, right, that are really looking tasty here for a sell, right, up and back down. Now, what else do we know about this, though? We also know this is a spiking channel. It's not just a channel. It's a spiking channel. What do spiking channels tell me? Spiking channels, and you'll learn a whole lot more about spiking channels in that free trading course in the upper right-hand corner, or you can grab the link in the description of the YouTube video here, right? But you can, right, what do we know about spiking channels? We know momentum is strong, but we know we're a little bit too low now. Right? The bears sold it here. They sold it here. They sold it here. Right? We're a little too low to sell. So what do we want? We want a correction. We want to go up. Right? Up how far? How far do we go on a spiking channel? On a spiking channel, it's usually the base of that channel. It's the first pullback of that spiking channel. Now, again, I know I'm covering a lot right now, so not to worry. Just grab that free trading course. It'll go a lot slower on that. Give me a much deeper dive. That's the reason why I want to give you that free trading course. Right? Because I can't go into that much information, although I try to do as much as I can. I can't go that deep into each of these patterns because of lack of time here on the YouTube video. Right? So grab the free course in the description or in the upper right-hand corner. Now, once we get this mark going higher here, what's the plan here? Right? I want to go higher. I want to sell the top of that channel. I want to sell the top of that range. What's going to happen though? Right? We're going to see something like this. Right? We're going to see it go one try, two try, failure, back down in. That's the plan. Right? Get that moving average coming up. One try, two try. Right? Now, this momentum is bearish. I can sell that failure. Right? Don't confuse it, right? We talked about this before. If the market is bearish, if momentum is bearish like this, I can sell that one, two try failure. But then remember, don't chase after it. Don't chase after it, right? Wait for what? Wait for that moving average to come over, right? A lot of times you can take this low to that low, right? And bam, pull back, right? Off that high. Okay, you're selling away from the low, right? Away from that low. Okay, that's my plan there. Now, what if price keeps going lower, right? What if price keeps going lower? If price keeps going lower, the next level now is to use that range as resistance. And what I'm going to do is I'm going to try to get that moving average here. I'm going to go up, one try, two try, failure, strength, pull back, right, and finish off that move from there, right? Failure, strength, right, pull back, and again, we'll find that little hidden channel there, right, and get that sell back down. Again, where's the goal? The goal for the bears is that pendulum swing. I want to go up, down, or down, right, and then sell off the underbelly right there. Now, how do we buy this market? How do we buy this market? One option, strength, pullback, strength, right? The market turns bullish. We find that new bull channel. We're buying the low of that channel, right? Really strong, exclamation point, right? Really strong move, okay? Or number two, one try, two try. Remember, momentum is bearish here. We can't take the failure. So what do? We wait for the failure. We wait for that jump up. Find that new hidden channel, right? Buy that pullback. And again, remember, you want to be as close to the low of that range as possible. That's going to be the kicker, right? You want to get in as low as possible for the move back up to the opposite side of that trading range. All right, guys? Boy, great plan for tomorrow. The only big question mark right now is FOMC tomorrow at 2 o'clock Eastern time. Will we have enough time to get at it tomorrow morning before all hell breaks loose? Only time will tell. And don't forget, tomorrow morning I'll be in our trade room with all of our members at 8 o'clock Eastern time. I look forward to seeing you there. Don't forget, we got the best free trial in the business. The link's in the description of the YouTube video. Grab our beginner course if you're brand new and you want a good foundation, or join the trade room as part of our advanced membership package. Any questions? Call that toll-free number, right? I'll be there to answer the phone, or hit me up on live support, right? It goes right to my cell phone, and I'm looking forward to answering all your questions. Guys, my name is Joseph. Hope you learned a lot, and hope you use it to earn a lot tomorrow. Be safe out there tomorrow around FOMC, all right? So be well, be nice to each other, will ya? And be here next time. Adios, amigos.